Hello guys, welcome to our YouTube channel. Today we are going to be discussing about the bearish breaker or bullish breaker. So in order to understand the bearish breaker and the bullish breaker, you will just have to know the keys. The keys elements are the most important ones. So I will have to teach you how the market makers do push the market. I will just have to explain how they push the market in order for you guys to understand the difference between the bearish breaker and the bullish breaker. So guys, what matters most in this game is psychology. Psychology is what matters most in this game. So once you know that, once you see Once you see that the market didn't break this level, just know that it's a bearish breaker. Bearish breaker. So let me write it down here. Bearish breaker. Bearish breaker. Bearish breaker. Bearish breaker. Bearish breaker. So how were you going to take this trade? Or how do you take this trade? Or how do you know where the entry is, or how do you spot entries? So guys, as simple as if you are using the horizontal lines, we can say that this is how it happens. This is how it happens. So what you just have to know here, you can just expect uh, something that you just have to expect here. It's a sorry guys, I just want to make it clear with you. Something that you must expect here should be a week. Sorry guys, I cannot draw candlesticks. I wish I can draw them, but it seems like it's very difficult. So in bearish breaker, you just have to understand the key elements of the bearish breaker. So the key elements of the bearish breaker are as follows. So most people use this rectangle here. Yeah, most people just do it like this. just do it like this. So it is very, very much important to low. It's the low. So as it is very, very much important for you to understand what is going on in the market. So knowing what's going on in the market is very, very much important because you just have to follow the rules, how the market makers or what the market players are doing. But this one, we take it as a lower high, but I'm not going to write it. But this is the key elements that you just have to understand. You'll just have to understand the high, low, higher high, lower low. Then after seeing this, after seeing high and low, and then the market is going to break the structure here. Here's where the market is going to break the structure. After breaking this structure, the market after breaking this structure, the market will create a higher high. After creating a higher high, it bounces back. After bouncing back, it it goes up and then break the strong support. Then once it breaks the strong support, it turns into resistance. So when it turns to resistance, that means the market it has to create lower low. After the market create a lower low, it just have to create a lower high. The lower high we call it an entry. Lower high we call it an entry. Let's just do it like this. Let's move this one to up. Yeah, let's see here. So here's the entry of the market. So where you have to enter the market is always here. You don't have to look for somewhere else. It's either you can just enter here. If it confirmed that the market is going to drop, you can just enter here or you enter here. So that is what happens to the market. And guys, you just don't have to forget this. Let me show you how. You don't have to forget that this line must not be bigger than this one. So that is what happens. You just have to understand that there is this line is not bigger than this one. And after that, you will just have to know how to entire trade. So it's either you use pending orders as professional traders. We just trade it like this. Selling pending, selling pending orders. So once the market come and break this low and create lower low, just know that the market will have to go and mitigate the older block. That is what you just have to understand. It have to mitigate the older block or the fair gap value, or sometimes it goes to the fair gap value. That is what matters most while you are trading. So without wasting too much time, I will just have to say that bearish breaker, a bearish range or down close candle in the most recent swing lows prior to an old higher being violated. So you just have to understand that this higher was violated by this higher high and it creates a higher high. So a swing low was disrespected and the market violate and it create a higher high. After creating a higher high, the market went down and create a lower low. So it was not supposed to create a lower low if it was in a bullish, if it was in a bullish breaker. So guys, you'll just have to know the differences and understand how these things works.